Hello, hello, hello. Good morning. We're going to follow the exact same steps that we did last time with a couple of multiple choice questions and an essay. I'm going to give you 3 multiple choice. You have 5 minutes. Send me the answers through the questions tab. Don't leave any unanswered questions. Read the question first, then answer. Okay, 5 minutes on the clock. Go. If Foster cost of capital is 12%, the net present value for this project is, so we want NPV. And here we're going to be using the timetable to be able to calculate NPV. So again, I don't care about net income. It's all about after-tax cash flow, always incremental after-tax cash flow. So since I have different types of cash flow, I'm going to use the PVIF, not the PVIFA. It's not an annuity. So for year 0, it is the same amount. For year 1, interest rate is 12%. So this is 12%. So I'm going to be using those interest factors for every year. So that's for year 1, that's for year 2, that's for year 3, and this is for year 4. And then I will have my calculation using the timetables. Now, the timetables on the exam will be provided to you. So once you go into the platform, you're going to have a link that is called timetable. So if you press on it, all the timetables will open, and then you can get any information you want. So these timetables will be provided to you on the exam day. Number 8, when implementing a continuous enterprise risk management process, what step? Oh, we already did that. I don't know why I have it twice. My bad. Well, let's disregard that. I don't know why I have it twice. Okay. So even though a company implements an enterprise risk management program, it still is likely to have risk. The risk is considered residual. Residual, it means remaining risk. Risk after implementing internal controls. So the natural risk without any internal controls, without any interference, without any mitigation strategies is known as inherent risk. Once I implement internal controls, any risk that bypasses the internal controls is known as residual risk. Okay, let's do an essay. Again, the same strategy that we did before still applies. So I'm not gonna read the given, I'm gonna start automatically with the question. Define hurdle rate. We took that in both section D and section E. Section B, sorry, my bad. Section B and section E. Corporate finance and investment decision. And explain why WACC is often appropriate to use as a hurdle rate. So hurdle rate, that's a general question. Again, the answer will never be found in the given. Hurdle rate is also known as discount rate, cost of capital, opportunity cost, that represent the time value of money or the reduction in value through time. That is used to discount future cash flow to the present value. I already answered number 1. Number 2, calculate WACC. So when they ask you to calculate WACC, the first thing you need to do is to write the formula of WACC, which is the weight of equity multiplied by the cost of equity, wherever that is. If it's preferred, common stock, and retained earning, then we have 3 weights, 3 costs, plus the weight of debt multiplied by the cost of debt after tax. Remember, with debt, you need to remove taxes because, again, debt is subject to interest. Interest is tax deductible. Thus, interest reduces our taxes. So it saves us taxes. So we need the cost after tax. Explain the importance of beta in the capital asset pricing model, CAPM, and explain the importance of beta in to do. I can answer half of it. beta represent the systematic risk or the risk of the asset or the investment against that of the market. The higher the beta of the asset, which means it's above 1, the higher the required return. The lower the beta of the asset, less than 1, it means the lower the required return. I already answered half of that question. I still need to understand SUSU to be able to complete and go forward. Now, number 1 till 3, mostly they are from section B, although number 1 also includes things from section E. The rest is from section E. So if you look closely, that's an actual exam question that came in one of the previous CMA exams, which means in one essay, you might have questions from different sections. The essay will not always come from one specific section. It can be a mix of one or more sections. Number 4, explain the importance of the changes in net working capital and capital budgeting, and identify which project time periods may be affected by changes in net working capital. So net working capital are any extra or shortages in funds that might either support the project instead of relying on external financing, or might be a shortage, thus we require more external financing to assess the project. So the net working capital is any excess that is generated by the company and can be used by the company to finance that specific project. Which time periods? Mostly it affects, or it can affect all time periods. However, the most sensitive or affected periods are initial investment, which is time 0, and terminal cash flow, which is the last after you close the project. Okay, so I already answered number 3. By now, I answered half of number 3, all of number 4, and all of number 1. Number 5, explain how depreciation and income tax affect cash flow and the capital budgeting of a project. We just did that in one of the multiple choice questions, and I just explained that. That depreciation, although it's considered as a non-cash item, however, it reduces our taxes since it is a tax deductible item. So we need to account for depreciation, calculate taxes first, because taxes are cash outflows. So they have to be accounted for, thus they reduce our cash position. And then we need to add back depreciation to get our net cash position, because depreciation are non-cash items and they will never be paid in cash. So I already answered number 5. Number 6, explain and identify and explain one method Shen can use to account for uncertainty. Although they ask only for one method, if more than one method comes to your mind, I suggest writing more than one. For example, we can use certainty equivalent, and you explain that certainty equivalents remove risk from the cash flow and remove risk from the discount rate, thus using only risk-free discount rate. And uncertainty in cash flow forecast, we can use also scenario analysis. So scenario analysis also remove uncertainty. So here 2 came to my mind, so I can write both. If this is wrong and this is right, I still get full grade. I will not be penalized for the first one, since they want only one method. If both of them right, you're good to go. You got one extra just in case. Define a capital budget post-completion audit. Define a capital budget post-completion audit, and explain the role of post-audit and the capital budgeting process. So the post-completion audit is when you take the project and you have actual figures that you compare against your capital budgeting, and you identify any variation before you proceed further with the project, so that you can adjust as you go forward to eventually achieve your desired goal or desired objective or desired outcome. So I already answered number 7. And again, with essays, there's no one right answer. As long as your explanation is right on, is true, and it answers the question, then you will get your grade. So I'm going to give you only 10 minutes because the rest that we haven't answered are straightforward. I'm going to give you 10 minutes to answer number 2, the rest of number 3, and that's it, I believe. Yep, and the rest of number 3. Okay? Come on, everyone. Time is ticking. I'm going to start reading the given while you post your answers. Danny Chen was recently hired as the manager of capital planning for Suzhou Tool Company, a precision tool company located in Fuzhou, China. Chen's first assignment in this new position is to draft a company-wide policy for the development, approval, acquisition, installation, and retirement of capital assets. In preparation for drafting the new policy, Chen has collected the following information. The company used weighted average cost of capital. We already know that as the hurdle rate for approving capital acquisition. The company target capital funding structure is 60% equity, 40% debt. So the weighted average cost of capital is simply weight of equity multiplied by the cost of equity plus weight of debt multiplied by the cost of debt after tax. So the first thing we got is the weights. We have 60 equity, 40 debt. So that's 0.6 and that's 0.4. So we got those so far. The before tax average cost of debt is 10%. We want after tax cost of debt, so we still need to remove taxes from the 10%. The risk-free rate is 7%. Historical beta is 1%. So here we're going to be using CAPM, and that's already stated in the given and in the question. We're going to use capital asset pricing model. With the current capital asset pricing model, we're going to use RF plus beta into market rate minus risk-free rate. So risk-free is 7%, so that's 7, that's 7. We have beta is equal to 1. This will help us answer. This will help us answer the remaining of number 3. So if the risk of Suzhou is 1, it means it's equal to the market beta. So the risk of Suzhou is equal or the same as the risk of the market. So the return of Suzhou will be the same as the return of the market, which means even if we don't do the formula or don't do the calculation, we can know that it's gonna be, the answer will be 13% since beta is 1. But just for the sake of it, I'm gonna use 13 here, 13 here. So 13 minus 7 multiplied by 1 plus 7 is gonna also be equal to 13%. And we have the tax rate, which is 40%. So I'm gonna remove 40% of my 10% cost of debt. I'm going to have the remaining 6% as being my cost of debt after tax. And thus, I have answered number 2 and number 3 with the given. So these are the answers, just for you to go over them quickly. I'm going to keep the floor open to you. Do you have any questions? Do you have any concerns before we close our session today? And wish you best of luck on your exam. Definitely. If you still have questions going forward, if you still have any concerns, you can always email support and they will direct the answer, the question, your question to the concerned party. So again, we are always here to support you until you pass your exam. So if you need anything going forward, please don't hesitate to reach out.